Good morning, traders. I'm Dan Pavilonis, Senior Broker, RJO Futures. This is Cholly, Senior Broker, RJO Futures. And we're here today to discuss tomorrow's USDA stocks and acreage report coming out at 11 Central Standard Time. And we're just going to discuss what the outlook is. All right.
Well, Dan, these quarterly reports, they're big in the sense that, the trade is looking and pricing in one bit of data, and then we get a curveball from the USDA. So oftentimes these quarterly reports, we have limit moves, up, down, whatever, and recent history tells us that, you should expect to be surprised, I guess. And right now, what we're looking for, the average trade estimate for corn stocks is 2.8 billion bushels. That would put ending stocks at the beginning of the new marketing year, September 1, somewhere around 686 million bushels under normal usage. And we're also going to get an update on the acreage here. So corn acres, because of the wet spring, the late start, back in March we were looking for 97 million plus acres of corn. We probably lost about 2 million. So average trade estimate is about 95.3. And the question is, where did those acres go? And I would expect that soybeans probably picked up, not 50%, but the trade is looking for soybean acres to come in around 77.9. So it's 800,000 acres or so that we would expect soybeans to pick up. Soybean stocks, we're looking for 442 million bushels, and again, if we get any big surprises, it would be that maybe soybeans picked up more acres, and the possibility that usage isn't quite what we thought, and that the stocks are at higher levels than what we're projecting right now. So the biggest thing I think right now is probably about the stocks, because the traders are really concerned with the old crop tightness. We could see that in those spreads. So I guess that's really, when I got to look at this number, it comes out at 11 o'clock, markets are trading and they start moving. The first thing I would look at is where those stocks come in.
Okay. What about the idea of the tightness of old stocks not being, I hear a little bit of talk that it maybe not as bad as what people seem to think that it is. And maybe the rollover into the new planting season, there was rough conditions to get everything planted initially, but it seems like everything's caught up. So, wouldn't that create some normalization in the market?
It would with time, I guess. And, this report tomorrow should give us a little clearer picture on where we are there. And it is possible. I'm one person who believes that because of the past 3 years of bad crops, that a certain amount of rationing has taken place. Prices have been very high for a long time now, and with that, usage would go down. That's what the market's supposed to do. And these high prices, I think, have maybe not fully accomplished what it should do, curb demand. But you could be right. Maybe we have more than what we're projecting right now, and that, I guess, would bring that old crop down a bit. I'm not so sure, if we're going to see a big easing in the new crop just yet, because there is so much time left in terms of, weather and the way the crop develops as we get into, the hot and dry season. Hopefully we start to get some sunshine in here sooner or later. We do need some warmer weather. It is important, and it was necessary that we got some cooler temps and the rain that we did, but at some point we need that sun too to help this crop develop. So as far as the old crop tightness, it is certainly possible that we find out there has been some adjustments made in usage, and that especially, we talk about wheat and corn and how so much of the corn goes into feed usage. And when wheat comes this close to the price of corn, in fact, today we're seeing July wheat and corn trade about the same price. I would expect that, the end users, the feeders, would switch some of that usage into wheat, and that would mean we have more corn.
Yeah, I think I don't know. I'm in the camp that and obviously this report can be a surprise. All these, especially over the last couple of years, USDA reports have been big surprises, or there have been big surprises in these reports.
Yeah.
But I think that old crop corn, or July corn, is trading at a premium over December, a little like close to $1, if not over that. But I think we're going to see that change as this report comes out. And I think that with everything that's going on in the macro aspect of our economy, like China slowing down, Europe not doing too well. China doesn't buy a lot of our corn. It looks like December corn, looking at a daily chart, we've hit 509 to 512 6 times in the last 4 months. And that, on a technical basis, it doesn't bode well for a bullish continuation on the upside. I think we could see $4 corn again. No problem. And then looking at insurance rates on, being at as low as 370. I mean, from what I've heard and from what I've read, that farmers don't get any insurance unless corn's below 370. So I think that they're even factoring in that there is a possibility that corn can go that low. And beans too. I mean, it's, again, these are going to be surprises and a surprise number, but I don't see how we can sustain the levels that we're at right now, especially in beans. I mean, if you look at South American crop, and what we were talking about earlier, currencies are a lot cheaper over there. They have the quality of the crop is pretty good. Why not just buy from there, especially if you're a country like China that's can easily cross over from country to country to get their grain.
And that's right. Why not? I would guess that the main reason is just well, a couple things actually. It's much easier just for us to move our crop out to the ports and export it all over the world. And the logistics in South America are still, rather behind, but they do have a big crop. And I think we'll continue to see that kind of trend in South America where they start taking over. We were the biggest producers in the world of corn. Mm-hmm. And, they're catching up. The Ukraine is also one now. And I think it is a matter of how easy is it to get the crop out. And the market right now is telling us that the July being, $1.10 or so over D's, is that there is some concern with this old crop tightness. And again, we're not going to see an early harvest this year. So what we have has to last us until we start to actually, harvest some corn and put the new crop into the pipeline. So, and there's also, hey, because it got in late, there's no early harvest. At some point, they're going to start to talk about, early frost, and that's what the market likes to do. So until we start to see things ease up a little bit in terms of weather for the new crop, if we have a better supply, the stocks for this old crop, well, then the price will come down. It may be a while, but I think you're right. These prices do need to come down. Mm-hmm. And again, I'm a believer, in the free market, and there's other countries in the world that, as their supply gets tight, they put tariffs on and restrictions, and the U.S. never does that. Sure. So until they can't get it somewhere else, they probably aren't going to come and buy our higher priced grains until they get a little more desperate. But we'll see how this number goes tomorrow. I think it is a very important number. It certainly has the potential to be a big market mover. And I guess the real surprise would be that we do have more than what we thought, because some rationing has taken place and we didn't use quite the levels that we normally do because of the high prices. That, again, it's all about what the market's supposed to do. If we have a tight supply, the price goes up, rations demand, increases production, and grains are very good at performing that function that you would expect out of a commodity. So it's going to be a big number, in my opinion. And moving forward, though, we'll quickly forget about it. We'll put it behind us, and we'll look at the weather again.
Sure. Yeah, that's going to be the biggest concern going forward after this.
Yeah, last time we did one of these things was for the March report, and we had a couple big down days in the corn.
Oh, yeah.
Right? We had more than what we thought. So I don't know. Is it really a surprise if we end up with something above that 686? I don't know.
It seems like when these reports come out, the USDA would rather. I don't see them changing the dynamics of the numbers that they put out, meaning that a lot of times it's kind of bearish to markets on these surprises, even though that would be the surprise. I think that farmers expected last number to be come in pretty bearish, and it came out. Well, it was bearish. It came out. They were expecting it to. A couple of guys on my desk were expecting it to go to be pretty bullish, and the number came out bearish, and we saw some continuation to the downside. I can't remember the last USDA report that the markets actually rallied off of.
Yeah, I don't recall either.
Yeah,
and
it seems
normally
like
this June stocks report, again, recent history has been that it's been more bearish than bullish. So,
all right, what your best guess? What do you think tomorrow?
I'm more bearish. My opinion is that prices have been too high for too long, and I think that all the rain we got, while it put us behind in getting the planting done, in the end ends up being beneficial to the crop's development and gets us through the hot and dry with a better yield than what we've seen in the past few years. So I would expect grain prices to move lower through the fall and into early next year.
I absolutely agree with you. You have anything else that you want to?
No, that's really it. Again, let's get through this number. Let's see, how, if there's some follow through. If we have a big directional move up or down Sunday into Monday, does it continue in that direction? And then again, hey, 1 week from today is Independence Day. It's a holiday. It's going to be a light volume week. Do we follow through a day or two, and then we'll start to focus on the weather again? I think that's really what it's going to come down to.
All right. Well, you heard it. That's the USDA report outlook. Frank Cholly, Senior, Dan Pavilonis, Senior Brokers here at RJO Futures, and good luck, good trading. Remember, you can follow us on Twitter and on Facebook, and also on YouTube. And remember, trading has a level of risk and is not suitable for everyone. Thank you.